Welcome back to another portfolio update. In this video, I'll provide a detailed review of my dividend stock portfolio and the dividends I received from July, August and September this year. I'll talk through the stocks that I bought or sold during that time and discuss my investing plans and thoughts along the way. And finally, I'll give an update on my income and expenditure for my rental property investments. My portfolio currently stands at £55,417 invested, which is starting to feel quite sizable for me. I did a video on why hitting the 100k mark is a significant investing milestone, so I'm 55% of the way there now. Feel free to check that video out if you've not already, link in the description. I always wanted this channel to be a realistic view of my investing journey, and if you look back at my historic videos, you can see how this has grown over time. The market value of my portfolio has taken a bit of a hit, but this is a good thing for me, which I'll explain in a minute. On the 1st of July, I had a 6.43% unrealised gain. This dropped to a low of 1.14% on the 22nd of August, and it's currently sitting at 2.58% at the moment. But as a dividend investor, I don't really pay too much attention to the market value of my portfolio, as it's my intention to never sell any of the principal. I'm only ever interested in the income that the portfolio generates through dividends. And if the market is down, this can mean cheaper prices for dividend stocks and ETFs, so I'm getting more value for my money. My investing strategy is to build a cash flow generating asset that pays me a passive income each month. And all dividends are always reinvested back into the portfolio to buy more shares that will pay more dividends, and then I'll just allow the compounding process to do its work. In the interests of transparency, this is my full portfolio, showing all unrealised gains and losses. I will always be open and honest about my portfolio, and I won't ever try and hide any losses. I want this to be a true and fair reflection of what I'm experiencing, so that people can relate and hopefully learn. The app that I'm using here is Trading 212. This is where I hold all of my shares, and I do so in a stocks and shares ISA. And this means that all gains and dividends are tax-free, as I'm based in the UK. If you are interested in starting a portfolio with Trading 212, I do have a link in the description where you can use my code, and we'll both get a free share worth up to £100. And you can just sell that share straight away and pocket the cash if you wanted to. I've always tried to invest at least £750 each month, and this graph shows how my total amount invested has grown over time. The graph continues to trend upwards, which just shows that I have been really consistent in adding to my portfolio each and every month. I don't really think that I do anything special, apart from making sure that I pay myself first. This means that once I receive my salary payment, I move £750 into my Trading 212 account straight away. Then throughout the month, I try and keep my spend as sensible as possible, but not being too restrictive. If there is any cash left over at the end of the month, I have the option of paying that into the portfolio as well. In the long term, I want the snowball effect of compounding reinvested dividends to boost my portfolio in a way that the income can start to contribute towards my monthly expenses. It would be nice to have my dividends fund my lifestyle, and maybe enable me to retire early. But even if I don't achieve this, then I see these dividend payments helping towards paying for expenses, family holidays and day trips, or even just allowing me to work part-time. And I'll let you know how much I'm currently making later on in the video. So let's have a look at the stocks that I've been buying and selling over the last few months. There has been some restructuring, where I've sold out of some positions and reinvested the proceeds. Over the period, I've spent £4,918, and I've sold £1,705. Let's look at what I sold first of all, and then we'll look at the buys. I've fully sold out of Bank of America, Enbridge, and ExxonMobil. These were positions that I barely added to over the years. I don't think that they are bad companies, but I'm just starting to favour ETFs over individual stocks, and I was looking to reduce the number of holdings that I have. As always, I'm not a guru, I'm just a normal person trying to improve my financial position. So these decisions might turn out to be the right call, or I could live to regret it, but all that matters for me is that I am happy with my decision. Now for the buys, and how I spent that £4,918. The bulk of that amount was topping up my ETFs, with £3,315 spent. I do want the bulk of my portfolio to be ETFs, to give me a solid, safer foundation for income. And I've also bought some more of my blue chip dividend payers when the price became attractive to me and my portfolio. Case in point was Realty Income, which has seen a big drop in price recently. I do have a stock review video on Realty Income if you'd like to see the reasons why I like this company. Link in the description. After these buys and sells, this means that the overall yield for my portfolio as a whole currently sits at 3.53%, the same as in my last update. This equates to around £1,958 per year in predicted dividends, or £163 per month. There will always be a discrepancy between my actual dividends received and my predicted dividends, just due to the timing of me purchasing shares and then being eligible through the ex-date of the dividend. Now let's look at the dividend income I actually received over July, August and September, with September being a really chunky month for me. In July, I received £52.84 from 5 different companies. In August, I received £87.94 from 6 different companies. And in September, I received £353.49 from 13 different companies. This was a really motivating month, with some hefty dividends from my ETFs. Looking into this graph, which shows all of my dividends since starting investing in 2020, we can see that the numbers have been increasing year on year if we compare the purple 2020 bars with the blue 2021 bars, green 2022 bars, and the yellow 2023 bars. The average monthly dividend in 2020 was £45.29. The average in 2021 was £77.88. The average in 2022 was £114.98. And the average in 2023 so far is £150.71. If you are a regular viewer to my portfolio updates, you'll know that I'm looking to earn an average of £200 per month consistently. In order to hit this at the current yield, I would need a portfolio size of around £67,916 and would therefore need to invest around a further £12,499. This might seem like a large amount, and it is, but I like to break these goals down to make them more manageable and achievable. So if I continue to invest £750 per month, plus reinvesting my actual dividend average from the last 12 months of £140, I should hit this in around 14 or 15 months' time. So I'm just over a year and a bit away. This is my investing strategy in a nutshell: to consistently contribute towards dividend-paying stocks and ETFs, reinvest all dividends, and have a long-term focus. As you might have seen in recent videos, I have started to forecast what my portfolio could become over the next 10 years. I don't want to predict anything other than what I can control within reason. So I'm assuming that I'll carry on investing at least £750 per month, that the dividend yield of 3.53% stays the same, all dividends will be reinvested, and that there'll be no dividend cuts or dividend raises. It's not the most scientific of estimates, but I do find it really motivating to look at what it could evolve into if I keep doing what I'm doing. We can see that after 5 years, I could have a portfolio worth £129,000 that's generating around £368 a month in dividends. And after 10 years, I could have a portfolio worth around £203,000, generating around £580 a month in dividends. I'm not naive enough to think that I could retire on £580 a month, but it would definitely help towards paying for bills and expenses. And I'd hope that by this point, the snowball effect would really start to ramp up. I did a recent video where I gave my 7 rules of money. They are my 7 simple, actionable rules that I routinely follow, and they have really helped me to gain control of my own personal finances. I'll drop a link in the description if you're interested. Rule number 4 on this video is to multiply my income. So I'm really looking at ways that I can increase my earnings, which will help me to get closer to maxing out the £20,000 limit into my stocks and shares ISA. As this table shows, if I can do this and invest £1,666 instead of £750 a month, it would really accelerate my progress. After 5 years, I could have a portfolio worth £204,000, generating around £580 a month in dividends. And after 10 years, my portfolio could be worth around £353,000, generating around £1,000 a month in dividends. These sorts of numbers really motivate me to try and invest more each and every month. As always, all dividends stay in the portfolio and are reinvested into purchasing more shares. My portfolio has earned a total of £4,206 in dividends, and by reinvesting these dividends, it's increased my portfolio from £51,210 to £55,417, which is a growth rate of around 8.21% so far. As more dividends are received and then reinvested, I do expect this percentage to get larger over time. I also invest in real estate and currently own 2 buy-to-let properties and a secure car parking space. So over July, August and September, this is what the numbers look like. The rental income has increased. One of my tenants moved out and the other one has renewed for another year. I let the management company decide what to charge, as they're the experts in the market, so they've managed to secure £1,000 per month for the 2-bedroom flat and £775 for the 1-bedroom flat. The car park also brings in £80 per month. The management fee has also increased, as it's a percentage of the rental income, which has increased. There is also a finder's fee and a renewal fee paid to the management company, which was paid in July. The mortgage has remained constant, and in September, my tenants reported that one of their chests of drawers had broken. To be honest, this wasn't a surprise, as it was an old piece of furniture that I managed to get for free many years ago. I always try and be a responsible landlord, so felt it appropriate to buy them a new chest of drawers, which cost £150. So my pre-tax profit over the period is £2,565. Now that you've heard my portfolio update, I'm always interested to hear from you, the viewers. Feel free to ask me anything you want in the comments section below. I'll be reading and responding to every message that I can. I hope that you found this video interesting and informative, and I hope it's given you inspiration and ideas for your own personal finances. If you have, please like the video and subscribe to the channel to make sure that you don't miss out on any future videos. Thanks again for watching, and I'll see you in the next video.